Key value drivers of stock market performance explained visually by Brian Ferroli. Value is derived from three main components: growth, return on invested capital, and the weighted average cost of capital. Primary driver of growth is revenue on a per unit basis multiplied by total volume. Revenue per unit is driven by the effectiveness of the sales force, increases in market share, and growth of the overall market, and what controls market share is the quality of the product times new products that are introduced. Volume is also driven by the effectiveness of the sales force, market share, and growth of the overall market. The next major component is return on invested capital, which is driven by the combination of revenue per unit, total volume, manufacturing cost per unit, overhead cost per unit, and invested capital per unit. Manufacturing cost is a major input and is driven by things like labor hours, error rate in manufacturing, unit labor costs, and the raw material cost. Return on invested capital is then compared to the weighted average cost of capital, which is the average cost that a company incurs per unit of investment. When return on invested capital minus WACC is a positive number, that creates value for shareholder. And then when that's multiplied by growth, that leads into an increase in per share value. If visual explanations like this are useful, you know what to do.